If you're a first home buyer and you're concerned about rising house prices, then you're not imagining it. It's not this thing where you've got all these old people saying, oh, young people don't know how to work, we're at 18% interest rates, blah, 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 all of that sort of stuff. The struggle is real. The reality is it's getting harder and harder to buy your first home as a young person in Australia these days. Sometimes not even a young person. The average first home buyer is now 37 years old. Here's the thing though, the government knows this, and for the last 25 years they've been rolling out all of these incentives to get first home buyers into the market. The main one that's being talked about at the moment is called the First Home Guarantee, commonly known as the 5% scheme amongst first home buyers. Why? Because you need just 5%. That's the topic of today's video, but here's the thing what nobody is talking about. There is a flip side to all of these sorts of schemes. Every time the government makes it easier, which they've consistently done over the last 25 years, every time the government makes it easier for first home buyers to get into the market, what they're doing is they're bringing demand forward. They're bringing in all these buyers into a market where there's already constricted supply. What that means is there's more buyers of houses more than there are sellers of houses. What that actually does is it pushes up prices of houses for the next load of first home buyers who need to get into the market. Those of you who know me, my name is Will Bell. I'm a mortgage broker. I've been doing this for 15 years in my own business. For all of that time, I've been helping first home buyers get into their own property. Today, we're going to break down the first home guarantee. It's pretty simple once you know the rules. Let's get into it. Okay, so the First Home Guarantee is the federal government, through their body, which is called Housing Australia, guaranteeing a part of the loan to the bank. Why does the government need to guarantee a part of the loan to the bank? Well, if you're rolling up with a 5% deposit, that's going to be really risky to any lender. From the bank's point of view, that's really risky. If you're only putting in 5%, the bank's lending the lion's share of the property, which means they're exposed. Basically, if the value of the property goes down and you don't repay your loan and the bank need to sell it, they're the ones exposed, because if the property prices drop, the bank are going to lose money. So in the past, how they've avoided this is they've used the lender's mortgage insurance. So to cover up this risk, the bank or the lender gets you, the borrower, to pay for mortgage insurance. Here's the catch with mortgage insurance. If you're putting in a 5% deposit, the mortgage insurance cost for you is going to be on the loan. So if